Hey guys, V. Rigoni, Max, high performance real estate entrepreneur. Thanks for watching the podcast, for tuning in, as they used to say. Don't forget, if you like it, hit the like button, but smash the subscribe button, okay? And so we can get more of what we got going on here. So today, what we're going to be talking about here, the value we're trying to bring today is when you're first getting started in real estate, what are those first steps? Now, started out writing this up a little bit, doing a draft, doing an outline, and basically I wanted to get all three in one podcast. But I don't really think that's possible because they're all individually important, and these are just three of the first steps. There are a number of other steps. So we're going to run this into like a little bit of a series. This will be part one, and then we'll move on and do part 2 and 3. And so basically, when you're thinking about getting into real estate, and I'm not really talking here about mindset. You were past that. You got your mindset. You got your head relatively in the right place, right? For the most part. And now you really are just getting down to, what is it that I have to do? All right, what's the first thing? Right? And I'm sure you've thought about this, and it's the old saying, you might say, well, geez, buying a piece of real estate, buying my first property for a rental property, it seems like it's going to be a huge problem. It seems like it's going to be overwhelming. Absolutely. No differently than the old saying of, how do you eat an elephant, right? And they always say one bite at a time. And so let's take this down to one bite at a time, because it's always, they say the devil's in the details, right? It is. And because, it's easy for me, who's bought a number of properties in my lifetime, to say, hey, go buy a rental property. And you're like, that's great, but I don't know how to do that. I have no concept of how to do that. Yeah, I listen to some people and they tell me stuff, but it's always from 30,000 feet. Well, we want to get you down on the deck, as a pilot would say. Let's get you where you really can start to move that process. And that doesn't mean you're going to go out yet and look at properties necessarily. You're going to go put offers. No, we're not there. You're nowhere near there. You know it. So where do you start? Where's the first thing? Well, if you're older than 12 years old, you probably got a credit score. There are probably some people out there that are under 12 that have a credit score too. Some have negative credit scores, and they don't even know it because their parents took out credit cards in their kids' names. Yeah, I heard about this one time. Parents actually go out, take out credit cards in their kids' names, and then screw up their credit. Can you imagine? That is some nasty shit. But we're not starting that far down. Let's get back up a little bit higher. And that is, we're talking about your credit. Before you can do anything, we figured out a long time ago that credit's important, right? Now, if you go back into my lifetime, and the concept of credit, it's totally different than it is right now. In fact, I think the first credit card, don't quote me, I'm going to be within a year or two of this. It was either the year I was born or the year my brother was born. So it was either 1954, American Express came out with the first credit card, okay? And American Express credit cards, as you know, they all have to be paid off at the end of the month. That's why most people don't even want them. Why? Because they want to carry that balance, right? Not such a great idea, but that's what they do. So credit cards came out a long time ago. And then, they went into more store cards where my first credit card, I think it was like in the late 70s, probably 78, 79, you just couldn't go out and get a MasterCard or a Visa or any kind or an American Express card. No way were they going to give a 19, 20-year-old, any credit. They just didn't do it. So what you had to do back then is you had to get a Sears card. Yeah, they used to be called a Sears credit card. Later, Sears sold out their whole credit division to Discovery, as you know it today. But back in the day, the thing was a tiny little card, different shape than it is today, and it was white with, I think, black lettering on it, and you could only buy stuff in their store. You're familiar with that, right? You go to Macy's, they say, hey, you want 20% off, get a credit card. You want 20% off at the Dress Barn, whatever. They always tell you, whatever store you go in, get 20% off, get their credit card. Now, understand that different kinds of credit cards they all have an impact on your credit, right? So let's just assume that you're sitting there and you've got a bunch of these store cards. Well, they don't impact your credit all that much in the sense of in a positive way. Basically, if you want to start to build credit, and let's start there first, you want to start to go out and you need to get major bank cards, like a Citibank credit card, whether it's Master or Visa, the ones that are sponsored by the major banks. They're the ones that have the greatest impact, positive impact on your credit score. Because this credit score thing is what's really going to be a big concern for you. Yes, in the world of real estate, you can go owner financing and you don't need any credit, blah, 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 blah. But that's not where we're going with this, right? We're talking about you're going to go and you're going to get a mortgage. So in order to get a mortgage, you got to have a credit score. And unfortunately, what happens to most people is they're young, they go out, they get some credit cards, they miss some payments, right? Miss a few more payments, right? Maybe they have run into some financial problems. They don't pay one off at all. Well, and then that card gets closed. And then all of a sudden they wake up, and they got a 450 credit score. Out of, I think, the highest you can get is, 850? Something like that. And now they feel like, what am I going to do now? Now, again, this isn't for the guy necessarily who's got a 450, but this is all good information that if you've got a low credit score, how do you get it from 450 up to where you need to be in order to get a mortgage, right? Because the whole thing about a credit score is it'll help you. Without the credit score, there's no mortgage. Someone's going to lend you money. They want to know what your reputation is around paying it back. And the only way they can do that is by going out and getting a credit score through TransUnion, all the other ones that are out there. Now, so you're sitting there and you're saying, my credit score's, 750. Fantastic. You're good. This part of it, you don't even need necessarily. But you can have a 750 credit score and sink that thing real fast too. So you may want to continue to listen. Because as we go through this, you're going to get more and more, more and more wisdom as to how to deal with your credit card. So you're sitting there and you've got yourself a lower credit score and you're like, well, this just got to stop. Well, one of the things you have to do is, you have to have a credit report done on yourself so you can see what's going on with your personal credit. Because how can you, how do you fix something if you don't start moving in a different direction, right? If you don't know where you're at today, how are you going to be able to get to the next level? So you got to go online. There's a number of places you can go now where you can get a free credit score, where it's not going to hit your credit, and because they're not going to show it as an inquiry, and then you can see where you're at with your credit score. Now, what are so you could have late payments on there, right? And those late payments, they're going to really impact that credit score dramatically, right? What's another thing that can impact that credit score that you may not even be aware of? There's more and more of this information out there, but that doesn't mean you've ever, does it seem kind of boring to click on something that has to do with credit? Probably. So most people haven't. So now you're sitting there and you've got a lot of inquiries on your credit score. So when you go into a store, and every time you go into a store, you get one of their credit cards. Remember I said it doesn't necessarily positively impact your credit score, okay, because they consider it not that important, but it negatively impacts it. It can negatively impact your credit score. How is that? Well, because every time you go in and you search for a new credit card, they do an inquiry. That's called a hard inquiry. And then if you get too many of those, then they're like, this person, all they're doing is constantly searching out credit. They're always looking to borrow more money. That's what that says to you. They're always just looking to borrow money. And then, that person becomes a little bit more of a concern. And so then that negatively impacts your credit score. So that brings it down a few points. So if you've got a dozen of these things on your credit score, you've got 24 of these things, you're talking about a situation that you're fighting inquiries. Now, there's a way in which to get rid of some of those inquiries, and we'll talk about that in a bit. But let's just keep going with things that impact your credit score negatively. So let's say you go out and you've got yourself, 3 credit cards and 3 or 4 credit cards, and you've got a total of $10,000 worth of credit. So that's a problem, isn't it? So you're sitting there with this kind of credit, and that's called your credit line, or your available credit. Now, the amount of that, you say, well, I'm going to go out, and if I just make my payments on time, and I borrow $8,000, and I make the minimum payments and pay them on time, yes, I know I owe a lot of money, but they'll love me. Well, yes, they love you, the credit card companies. Why? Well, because you're paying anywhere from 17 to 27% in interest. Jesus. Like I always say, it'd be nice to get an investment that would give you that kind of return. Instead, you're sitting there paying that. What the credit usage will do is that if you're going above 30% of your overall credit usage, so if you got more than $3,000 worth of credit, you are now negatively impacting your credit score. So to have some credit, to use those cards, pay off those balances every month, that'll be a positive impact. But as you start to get a greater percentage of debt to credit usage, or credit usage to the absolute credit that is available on your cards cumulatively, you start to walk into the realm of negativism, and they're going to start to hit your credit score, and that reduces your credit score down. So if you if you get too many hard inquiries, that's going to hit it. Well, let's go right to the first one, right? If you don't make your payments on time, that's going to hit it, obviously. If you get too many hard inquiries, that's going to be a negative impact. And if you have too high of credit usage. Now, there's one more little detail in that credit usage thing. They tell you that in order for it to be a positive impact on your credit score, stay below 30%. In order to be even a greater positive, get it below 10%. So if you've got $10,000 worth of credit, make sure that your credit is never more than $1,000, which is be 10% of the $10,000. And you might say, well, then why did I get these credit cards? I want to borrow more money. Well, then you have to start to ask yourself, why are you using these credit cards, right? There's the whole concept of, immediate gratification, right? You want to go buy something now, so you use the credit cards. Well, maybe you need to take a look at your overall concept of what the credit is there for. You just want to be a professional consumer, right? What do I mean by a professional consumer? Someone is going to work every day, just working. And at the end of the month, they're just paying all their bills and all their credit cards and all the debt on the car payment and everything else, and they end up with nothing. Well, you're a great consumer. You might as well call yourself a professional consumer, but you're not going to be an investor, and you're not going to become financially free. So it's how you have to look at this. Now, if you say, I would like to have access to more credit, then get a higher level credit usage. I'm not saying don't go out and have multiple credit cards. You do need to do that, especially if you have a limitation as to how much they're going to give you per card as available credit. So if you only can get $3,000 available credit, well, you might have to go out, take the hit on your credit score, have a few more hard inquiries, but to raise up that credit availability so that when you do use your credit card, let's say you just use it to buy a couple of airline tickets, you didn't go over the 10%. You're keeping it down below the 10%. So yes, sometimes you got to take some short-term pain to have some long-term gain. Now that's some of your basic rules around credit. Now, you can go out and listen to a 2-hour seminar on credit, and they're going to get more into the weeds on it. I get it. But if you just follow these basic rules, make the payments on time, even if they're just the minimum payment. I don't care if it's $10. If you don't make the damn $10 payment, it counts against you. It lowers your credit score. And that's really important. Try to reduce the number of hard inquiries, especially around these store credit cards. Because, man, you can just knock them up because they say, oh, you're going to get 20% off your first purchase. Oh, that's great. Why don't I do that? Boom, got a hard inquiry. Over 20%, it's not worth it, folks. And then keep your credit usage in line. Now, there is another little nuance to this, too, as I'm thinking about this, and that is when you go to make your credit card payment is a different day typically, than when they report the amount of credit you're using on any individual card to the credit union. So make sure that you find out what date they're actually reporting on. And if you have jumped up your credit usage that month on your credit card, if you pay it down before they have gone and reported it, it won't count against you. Plus, on top of that, guys, you won't pay any interest on it. Typically, on these credit cards, if you borrow money and you pay it off within the same month, you're not paying any interest. Now, it's date sensitive to what your date of payment is. I get that. But relatively speaking, that is a truth. It is also a truth that make the payment not necessarily on the date it's due, but if they're reporting it 3 days before the date it's due, make sure that you're paying it before they report it. So that if you have used $3,000 on a $10,000 line of credit across 3 different cards, and now, you want to, or you've used $4,000, you want to get it down below the 30%, or if you want to get it down below the 10%, you get it paid off before they report. But if you don't know it, and if you don't know the question to ask, how are you going to ask any question? And so these are some of the nuts and bolts that people don't think about. Yes, we're talking about buying houses. We're buying rental properties. We're talking about that. But in order to do that, you got to do some things right first. So I hope some of that is making sense. Now let's get to something else that's really important. So let's say you're sitting there, and this has happened to me in the past, because there was a period of time that I wasn't buying a lot of real estate. Right? One day, let's just talk about my situation. There was a period of time where I wasn't buying a lot of real estate. I was in the financial services business. I really didn't care about my credit score or anything like that. I knew I had a couple of late payments from years earlier, blah, blah, blah. One day I look at my credit report after like 5 years, and it's like 500 points. Like, the only thing I owed was on my mortgage, and here I got a credit score that's in the tank. Well, why was it in the tank? Well, because there was a very small loan that didn't get paid off many, many years ago. It was through the divorce situation, whatever, that went on, was a couple $1,000. And then there was just no credit. None. I mean, there might have been, I think there also was a couple late payments on there from years and years ago. I didn't even have a credit card in my wallet. I didn't even carry a credit card. You use no credit. So if you don't use any credit, do you know what happens to your credit score? It just goes into the tank. So, I'm like, it's time to read, let's get this back, baby. And that's why what I'm telling you to do and what I'm telling you to watch for is what I was doing. Now, you could choose to do any of this or none of this or whatever, but if you're watching this, it may be making some sense. Some of what I've gone through, maybe, you may be like, hitting some chords on your guitar of what's happening to you. And so then I'm sitting there and I'm like, now I know, I listened to a couple podcasts on how to fix it, and they're like this and that. And they say, write all these letters. I didn't want to write any letters. So I hired a company, and this company was a credit repair company. First I pulled it up, I checked it out, looked pretty good, hired them. What they're going to do now is they're going to go in. First of all, I went back to the bank that I forgot that they never even got paid off. It was like $2,000. I wrote them a check and paid that off. Just because I didn't want that on there, period. And I don't even know if it was showing up on my credit anymore. It came up somehow and got taken care of. But the problem was I had no cards. I had no credit cards. So they said, hey, this is what you got to go do. You got to apply for some credit cards. I did. I got some credit cards. They had low balances, low available credit on them. Go someplace, you got a 500 credit score. And you say, well, why didn't you have a credit score because you bought cars? No, I always paid cash for my cars. So I didn't even have a credit score for that purpose. Hadn't bought a residence in a while. So however you got into the hole of having a 500 credit score, there's a way to get back out again. So I hired this company. I think it was called McCormick and something. And it's a shout out to them. You can look them up. And they did me right. But there's some aspects to this you got to understand. This is more the industry, had nothing to do with the individual. But I found that the way they work is this. They basically work on a basis where they're going to send out so many letters to repair, to get rid of hard inquiries. They're going to send out so many letters to repair, to get things off of your credit. Okay, so you can get certain late payments off of your credit report. But there's a process in which they do it. They have to send letters to that company. If the company doesn't respond within so many days, then they're required by law, and they keep sending these letters. And then when the companies don't respond, then they send them another letter saying, hey, you got to take it off because you basically didn't respond. Things like that. They have their procedures, all right? But it's like a subscription. You're it cost me like $100, $120 a month, $130 a month, and every month they're going to do things. Well, it became very aware after a couple of months. The first couple of months, great. Things were coming off. Everything was fine. Great. All good. Then all of a sudden I'm like, well, this way this billing is designed is that the longer it takes them to fix your problem, the more money they make. That's how the whole industry basically works, is what I found out. And so, well, then what does it take on your part? Well, then I start making phone calls, and I start calling them, and I start being more attentive to what they're doing. And they were always very cooperative. But, the squeaky wheel gets the grease, right? So be the squeaky wheel. Yes, give them the time to go do it, and then start to. So it took about, I'd say, 8 months or so. They got that thing much higher, into the 7s. So we went up like a couple of 100 points just by paying attention, and then by going out and getting some credit cards, and then raising your credit score by getting some credit cards. Yes, it's kind of like how could I say? It's like if you're using an axe to cut a log, right? You're going to get tired, but at the same time, the log's going to get cut, right? Well, in this case, the hard inquiry doesn't help you, but getting the credit card helps you more. So one hurts you a little, and the other one helps you more, and so then you got to go out. And now what do I have? I carry about 5 credit cards, and then the available credit from there. Now, I keep my credit now at under 10%. In fact, I try to make sure that all my credit cards are paid off every month. But we'll talk about that in a minute. So basically what we're talking about here is, that's how I did it. I hired a credit card agency, or a credit repair agency. Now you can go and you can find out how to do it yourself, and you can write all these letters, you can make all these phone calls. But come on, guys, are you really going to do it? Spend $130, $120 a month, and then follow up on them, and then they will do it. And some of these guys, and again, the company I used, they were excellent. I had no problems with them. They answered the phone. They were very much on top of it. But again, it's the old squeaky wheel. Put some grease on it. Make some complaints about, hey, what's going on here? Can we push this a little bit harder? Well, then I find out in my process, well, if I paid a little bit more money, they would have more attention. So I even upped it by another 20 or 30 or 40 bucks, whatever it was. And you might say, well, you've got the money, I don't. All I know is that if you can fix your credit for under $200 a month, and it costs you $1,000 over the course of the time to fix your credit, your good credit will make you millions of dollars. Or you can keep the $1,000 in your pocket and walk around with bad credit for the rest of your life. What do you think? There's a trade-off on everything. So what I'm trying to say to you is, this is the way to go. This is how you do it. Because if you don't have credit, who's going to lend you money? If you don't have credit, how are you going to buy your first property? So before you can go for the loan, the credit has to be right. That makes sense? Now, again, some of the other things I learned is, make sure that they're all major credit cards. And in the beginning, if you're sitting there, Vic, and you're saying to me, hey, Vic, I don't have a lot of money in the bank, or I don't have the ability. Well, what they'll do is they'll tell you to go to a bank like Chase or whatever, and get a credit card that's prepaid. So they'll give you a credit card with a $300 limit, but you got to give them $300. You say, well, that's not really credit. I get it. What you're trying to do is show the bank that, you're a different person than you used to be. If you had bad credit, and if you've got no credit, and you never had any bad credit, you may still need to do this, because you have no credit history for them to take a chance on you. And so by putting up money and getting one of these credit cards, secured credit cards, then they'll go ahead, issue the card, you make the payment, you use the card, make the payments, issue them, and then all of a sudden that they'll say you can do for more, and then all of a sudden you don't need to bring in any more money. They'll invite you to come in and fill out another credit card form and get a regular credit card, or you'll start to get the credit card advertisements in the mail. And again, be careful of that. These guys are unbelievable. Did you get these things in the mail? You deserve this. You deserve $3,000. You've done so well. You deserve it. Okay, don't walk into their bullshit. You deserve the things that you can buy with our credit card. Well, that's just a whole kind of marketing bullshit to me. Now, when you do start to get these credit cards, make sure that you then apply. Wait for the ones that are coming in, that are coming from Chase or Citibank or Bank of America. These are the companies, even Capital One. These are the companies that have a positive impact, that when you get their credit cards, they have a much greater impact on your credit. So that's what I'm talking about here, guys. That's what's so important, is that, yes, can you buy a house through owner financing? Absolutely. But I'll tell you this, anybody that you get owner financing from and they don't check your credit, well, woe on them. That may happen. But I want to be able to use owner financing, but I don't want owner financing to be the only thing I can do. And I get it. There's courses out there about how to buy a house with no credit. No problem. But let me tell you, why do you want to take the harder road? If the interest rates are right at the time, and you can buy a house and get a 30-year mortgage, not have to worry about a balloon payment that usually comes with owner financing, blah, 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 then take the easier path. Now, if the economy all of a sudden credit slows down, they tighten up credit like they're doing right now in commercial lending and things like that, that's a different story. Then there's other reasons to use owner financing. And yes, if you're just so on fire that you don't care, you're going to go buy something no matter what, and you're going to figure it out, no problem. Then figure out through owner financing. But if you want to do this in a way in which you can multiply it out, you can do it over and over again, you can build a good credit reputation, so when you walk into the bank and you want to borrow $4 million to buy an apartment building, or $40 million, you've taken the right steps in the beginning to do it. Because remember what I always talk about, think big, start small, grow fast. And being able to deal with a bank and deal with your credit score is a great way in which to grow fast. It's a great way in which to start small and then grow fast. So I hope that this has really made an impact on you. And let me tell you, I've been there. I've had excellent credit in the past. And then I ignored my credit and it went down the drain. Now I pay off, I've got great credit. I pay off those credit cards every month before they report. I carry basically a zero balance. And when I say basically, because listen, anybody that tells you they absolutely carry a zero balance every single day of the week, every day, that's all bullshit. But if I'm carrying a balance, it's just because I didn't make this call or that call. The payment was made. I didn't have time to check the bank account or whatever, but basically keep it to a zero balance as much as possible. Because why? I don't want to pay their damn interest. I want to use their services, and I get to use it for free. I get to use their services to build my credit score. I get to use their services for the convenience of it. I get to use the services to do it without a cost. And then there's the last thing we can talk about, and that is, for me, I like using the American Airlines card. I know. I like American Airlines better than some of these other ones, so I use their card. But you can get this through United too. I'm sure Delta has a program or whatever. And so then you get the points on the card. If you're ever sitting on an airplane, they'll give you the 50,000, miles points to begin with, or 60,000, whatever it is. And then when you use that card, it goes to more points, right? I know I think I'm up to about 100,000, 110,000 points. I don't even use it when I go actually book, but then I book my flights with that card. I use this one card for just about everything, and then I pay it off. All right, now some people want the 2% cash back, all that kind of stuff. I get it. Whatever it is you like, whatever it is, then use the card for that purpose. Once you're in real estate, you're spending some serious money. And then if you can use your card, you're either getting the 2.5% back or you're getting the bonus miles, whatever. No problem. That's not a bad deal at all. And so there are some really good points for good reasons for using a credit card. You got the convenience. You can do it without the cost. Why not? That's what I'm talking about here. So remember, this is your life. You started out by having good credit. Now, you might say, well, I couldn't start that. I started with good credit, then it went down the drain. Well, then use some of what I talked about here and get it fixed. And don't worry, spend some money, folks. You throw money away all the time. Spend some money, get your credit repaired. Because then we can take it to the next step. So that's really the bottom line here. And the next step is, how do I get a loan? What does an FHA loan look like? But that's what we're going to talk about next. So let's get out there, guys. Let's make it happen. And remember what I say. Think big, start small, grow fast. Let's get out there. Let's make it happen.